Wow, guys, 95% loan to value mortgages are about to start. So roll VT. This is it, guys. I mean, 95% loan to value mortgages and the mortgage guarantee, what the government's given, is quite an implication for the housing market for both sellers, buyers, landlords, tenants, whatever, because it has an implication on all of us. And how is this going to go and where are we going to go with things? So it's a bit tentative information just now. And we've got Neil Bird on from Cara Mortgages. Hi, Neil.
Hi, Jim. Thanks for having me on.
Yeah, thank you very much for coming on. So, Neil, we're going to talk about the 95% mortgage guarantee in a wee bit more detail. I mean, is this just a pie in the sky thing from the government, or is it actually coming to fruition? Is it on the horizon, or what's happening with it?
No, it's definitely real. The Chancellor announced it in the budget last week. It's a great scheme. It sounds very similar to one they had a few years ago, when again lending had been restricted by lenders primarily at that point due to the credit crunch. Mm-hmm. But what it is the government are effectively offering to back the lenders in case there are any mortgages that they have problems with and have to repossess the house in the future. So rather than the bank having to repossess, maybe sell at a loss and lose money, the government is going to guarantee a significant portion of those potential losses in the background. So it removes
effectively an underwriter.
From an insurance point of view, maybe, yeah. I mean, they're obviously not involved with who can apply for the mortgage. That'll be down to lenders' own criteria as usual. Yeah. But it just gives the banks a comfort that if they are exposing themselves to 95% mortgages and taking on more risk, they've got the government in the background to make sure that any potential losses aren't significant. And it gives them that comfort to start offering mortgages at a level they haven't done for pretty much almost a year.
Yeah, I'll just say to anybody watching, if you want to ask any questions of Neil just now, please feel free to ask these questions, but I'll be asking questions as well. So the 95% mortgage guarantee then, is anybody allowed to get it?
Pretty much, yeah. It's unlike a lot of the schemes that have been either revised, renewed, refreshed, brought out recently. It's not specifically for first-time buyers. So it's pretty much anybody that's a first-time buyer, home mover, as long as it's a residential property and for their main residence, they can potentially take advantage of this scheme.
Yeah, so take heed, buy-to-let landlords. You're not getting it. we're still at 75% loan to value with buy-to-let, aren't we?
There are actually 2 or 3 lenders out there doing 80, but you are obviously talking higher rates, higher fees, and that kind of thing for that kind of lending.
This is quite an interesting question from Lynn. Will the rates be higher than other mortgage types?
Good question. You would assume normally yes, because obviously the cheapest mortgages are 60% or below. Then you go up at sort of 70 to 75. There's a slight jump, 80, 85, 90, then 95. The market is completely skew at the moment in terms of, because of the drawback in lending a year ago when the first lockdown hit and lenders reducing everything down to 75% and things only gradually coming back slowly since then. I was saying to a client this morning that the rate I'm getting her on her 90% mortgage is probably higher than she would have gotten on a 95% a year or 2 years ago.
Yeah.
But I mean, they're not massively high. I mean, we're still probably talking, I think it was 3.5% or thereabouts, which is what 95% mortgages were at about 4 years ago, maybe. Yeah. So we're not going to see a massive jump in rates, but obviously there is still higher risk involved. So
what part of the underwriting will the government be doing? Will they just be doing the 5% difference then? Will they be underwriting the 5%? Because when you think about it, if you can get up to 90% just now, then that takes you to the 5%. Then surely the government should only underwrite the 5%.
Well, I mean, they're not underwriting it from a point of view. They've got no involvement in the application. but what they're effectively doing is insuring the lender against any losses. And I think it's, I did read somewhere that the figures were on any part of the loan. Yeah. So,
because I mean, that's when you think about the logic of this, when we walk this through, that means the banks have got less of a risk now than they had before for any mortgage right across the freer. When you think about it, so why on earth would they then be obliged or be allowed to charge a higher interest rate than they would do on a 90% mortgage that you would get without the government support?
it's, as I say, I'm trying to remember what the exact figure I read was, but I think it's on anything above 80 or 85%. The government will then guarantee 95% of that amount against any losses.
Right, okay. So, yeah, well, I've got a benchmark there where we go up to about 80%, and they say everything after 80% is that going to guarantee up to 95% of that. Yeah. That makes absolute sense now, because I kind of thought, I mean, it's like, it is like the logic is like, where is the risk then to the bank if they're indemnifying everything? And it's like, well, we've got a guarantee. It's like, well, why would you be allowed to charge higher interest rates then if you've not got any exposure and no risk? Because that's why they do it, isn't it?
It's partly risk, but it's also supply and demand as well. I mean, one of the issues that we've had, and I've mentioned a couple of times to you, is that, especially with the 90% lending, when you've only got 2 or 3 lenders lending at 90%, all the applications go to those few lenders. They can't cope with the level of business, and the only way to put people off applying to them is to crank up your interest rates.
Supply and demand, isn't it?
Yeah. So again, there's not every lender is going to be part of this scheme. So there will be a handful of lenders that will take part, and they don't want to overexpose themselves. So there will be constant juggling of interest rates to try and not always be the cheapest lender, because you don't want to take on all that risk yourself.
Yeah. I mean, Lynn's making my job really easy here. Is it certain lenders that have just signed up? It's like,
good question. Yes, already. Obviously, the government went to the mortgage market to get agreement from the lenders before they announced it. Otherwise, they'd look pretty foolish. So Lloyd's, which is obviously Halifax, NatWest, Santander, Barclays, HSBC have already said yes. I would expect we'll see a few more. I would imagine Nationwide will probably become involved, possibly the Leeds, and probably a few others as well.
Once the big players really go for it, everybody else really follows suit and falls in line, don't they?
To a certain extent. I mean, you're not going to find lenders that have never done 95% before suddenly wanting to do it.
Yeah.
They just won't have that appetite or capacity. But it does start pushing the market up again, which means hopefully also mean that the rates at 90% and 85% might come down slightly, because there are more people applying for the 95% mortgages than the top of the market, as it has been for the last 6 months. So it could have a sort of trickle down effect. Rates will start to hopefully lessen maybe slightly as we go through the year. The other end.
How do we think that'll influence? How do we think that'll influence the housing market then? How will that influence it? Because obviously, if we've got more mortgage availability and more people now able to put down a less of a deposit, so you're bringing more people into the market, then that would obviously increase demand. So supply is actually quite limited just now. You know that yourself. I mean, I'd spoken about it 12 months ago over Fife. There was 1,200 properties for sale on the market. Now there's 625 for sale on the market. There's half the amount of stock available for sale. So supply is restricted, and this might actually exacerbate the situation by actually creating more demand.
Potentially, but on the other hand, there's probably people that are holding off putting the property in the market because they were worried about the market falling away.
Yeah.
Whereas this will hopefully provide a boost that will give people the comfort that they can put the house on the market and sell comfortably.
It's confidence, isn't it? Really, it's down to how people perceive the confidence. I mean, you could have a weak market, but if everybody's quite confident about the situation, that's when they come forward and actually people actually begin to respond to it. You could have a really strong market, but if people have lost confidence in that, that's when the market tumbles, regardless.
Exactly. Yeah. Well, like you say, confidence and perception. But the other thing that's probably having a factor at the moment is obviously COVID and lockdown and homeschooling and things like that. So once once restrictions start to ease, as the numbers get better and more of us get the vaccine, then people will have more time on their hands to think about putting their house on the market and not have to worry about clearing the kids out of the house while they're trying to do some homeschooling to try and get a survey done and or get a viewing done, as you probably found on a few occasions. So there are other factors involved as well that will hopefully lessen throughout the year.
Yeah, it's getting back to that normality. I mean, the reality is you can't really tell your kids to stop growing up, so you do need a bigger house. So whether you like it or not, it's like, and you can't stop your baby from being delivered because it's 9 months and I'm coming, whether you like it or no.
Exactly. And all these people that are sort of their early 20s that have been in lockdown with their parents for the last year, I think it's maybe about time I got out and got my own space.
They've been driven crazy lately. It's like, I just want to be out of here.
Definitely, yeah.
So that's them. So we could end up creating a lot more. But the good thing is, I mean, it will give access to first-time buyers, wouldn't it? I mean, that's the essential thing here. And how will the implications be then if you look at that in conjunction with the First Home Fund? Is that coming back?
Yeah, First Home Fund's back 1st of April.
Yeah.
Obviously a very different scheme. The thing with the guarantee scheme is that there is no government input to the purchase. So there's no money being put into it.
You can't do First Home Fund and the guarantee scheme.
No, it's one or the other.
It's one or the other, yeah.
So it's a different type of lending. There's different lender criteria and credit scoring and underwriting processes involved with the First Home Fund, because there's a government loan against your property that they have to take into account. The guarantee scheme, from a customer's point of view, from the bank's point of view, it's pretty much just a bog standard 95% mortgage.
Mm-hmm.
And as long as you're fitting the lender's normal 95% criteria, or whatever criteria they have in April when this comes to life, then it should be a bit more straightforward. There's no loan applications other than the mortgage that you have to take care of, no other criteria you have to fulfill, no loans registered against your property apart from the mortgage itself. So it should make life a lot easier. And unlike the First Home Fund, it's actually available to home movers as well, like you've said.
Mm-hmm.
It's apparently actually it's available for new build as well as second-hand properties, but in the new build market, I don't think it's going to have much of an effect, because lenders don't really go up to 95% on new builds generally anyway, with one or two exceptions. Yeah.
Can I assume that the First Home Fund's never changed from when we did our first discussion about it on our YouTube channel in 2019, in December 2019? So that's basically the same system.
That's the same system. No difference in what they're doing with the scheme, how it works. The only difference is in this year's budget. Unfortunately, it's greatly reduced, so it will probably go pretty quickly.
Oh, right. Okay. So they've restricted the amount of money that's available for the First Home Fund.
Yeah.
So if anybody's wanting to get access to the First Home Fund from the 1st of April, and it's up to £25,000 towards your first purchase as a first-time buyer in Scotland, they need to go on to our YouTube channel, on Fife Properties YouTube, and just look up First Home Fund, and you'll see the discussion that Neil and I took. I think it was a 15-minute discussion about the First Home Fund itself and how it operates and the ins and outs of it. But you need to be quick with that, because it'll run out soon. I mean, last year it was supposed to go the whole year, and it ran out in September.
They went, I think, 70 million over budget last year.
Yeah. So have they restricted it? What have they put a figure on it? Do you know that figure?
Yeah, 60 million, and that's compared to an initial pot at launch of 150 when it first came out. But I think they ended up with over 200 million. Is what they actually spent, because they were oversubscribed last year, but it's been massively restricted. It's partly because of the First Home Fund, and money that gets put into a project like that is a devolved issue. So it comes from the whole Barnett formula surplus budget scenario, whereas this scheme, because there's no direct money being input by the government, it doesn't come under any of these complications.
So if I'm right, then 60 million divided by 25,000 means they could probably afford to help 2,400 people.
Yeah. Whereas before,
and that is literally it.
That's
Before
it.
it was about 8,000 or 9,000.
Yeah, exactly. It was initially 6, but it ended up being about 8 or 9 because it was so popular.
Okay, so if anybody's out there and looking at the first home fund, you need to be quick with that. It's up to 25,000, as I said, towards your first time buyer in Scotland. But you need to be quick for that. And Neil from Cara Mortgages is probably the best person to speak to that, because he's had several people over the year through this process and he knows how to do it. And we just discussed it before we came on here, and the fact that you've got somebody getting in line to be set up for that from the 1st of April. This is what happens because you find maybe 2 weeks into April, they've finished. It's run out of money. But it's because everybody's put their ducks in a row prior to this, knowing it's coming on the 1st of April, and they've all chucked their applications in straight away. So if you're going to do that, I think the key here is to be ready and willing to go straight away.
I suppose following on from that, a question I was asked yesterday by a client who is trying to put his ducks in a row was asking me if there was any sneaky way that he could try and get his application in before the 1st of April. The answer is no, because if there was, everyone would be doing it.
So it's all right, pal. I'll do a phone Nicola in now. Give me a second.
So,
Nicola, hello?
No.
Kate Forbes. Kate, hello. Could you sort this first home for me? Sorry, what was that? No, sorry.
But yeah, so I mean, what we can do is we can get somebody approved in principle with a mortgage lender, because the lenders are happy to accept the applications. Yeah, because they know that with the first home fund, there's very little criteria involved with a person getting accepted for it. Yeah. So they'll take the application. So we can get an agreement in principle. Somebody could have an offer accepted on a house. We could even apply for the mortgage in full. And as long as the seller is prepared to wait on approval for the first home fund coming in after the 1st of April, then everyone's good to go.
Perfect. And I'll put your contact details in this post after this, so everybody can get in touch with you if they need to. I'll get the best contact details for you. So that's Neil Bird at Cara Mortgage. So in terms of the rental market, how do you think that'll affect things? Because you'll probably have more first-time buyers then thinking, okay, I can get a 95% mortgage now, and I don't need to live in rented accommodation anymore, because I've probably just got enough to help me out on the 95% mortgage.
Well, I mean, you deal with the rental side of things more than I do, so you're probably better equipped to answer that than me. But yeah, it will hopefully, well, I say hopefully, but it will probably allow people to either move out of rented potentially or not go into rented as a stopgap, like you say.
Because for a first-time buyer, it's a vicious circle, because then the reality is you've got to pay your rent, but you're trying to save for your deposit. So generally, what my advice would be a first-time buyer is stay with your parents as long as possible. Milk it for all it's got, please, because once you're out, and you can't go back. And the reality is, you'll realise it'll cost you an absolute fortune in council tax and rental payments and electricity and gas and food, everything you've got going. And all of a sudden, what you thought was just a mortgage exacerbates and grows into some big machine that you have to feed probably for the rest of your life. So make sure you stay with your parents as long as possible to save your deposit, then take that leap. That's what my advice would be now, in hindsight of what I've learned. Is that kind of similar to yourself, Neil?
Well, it's definitely the cheapest way to live. Whether it's quite as good for your sanity, I'm not sure. But yeah, I mean, obviously the average age of a first-time buyer is much higher than it used to be. But I mean, it might have come down slightly given the schemes that we've had over the last few years that weren't there when I started doing this job 17 years ago. But I mean, the other thing to keep in mind as well is when you're buying a property, it's not just your 5% deposit or 10% deposit. It's also solicitors' fees and cost of buying furniture and paying other fees and costs that you might come across.
It all mounts up. It's decoration fees, it's carpets, it's curtains, it's cutlery, it's crockery, especially if it's your first time. So what you want to do is lean on your parents again or anybody else to borrow, beg, and get as much as you can from everybody for free. That's probably the best option.
Well, every time my mum went shopping before I moved into my first flat, she came back with some cutlery or some kitchen towels or something else to add to the kitchen or whatever.
Yeah.
My dad was going mental, but it suited me.
And that's probably the best advice. And you know, so that's it kind of the now. I mean, that's where we are in terms of the 95% mortgages. So when will we find out the exact detail, or is it just a case we let it happen now?
Just a case of let it happen. The lenders will hopefully start making announcements in the next couple of weeks. The key thing will be, as Lynn was asking, rates. I don't expect to be massively higher than anything that's currently available.
Yeah.
Like you say, it's backed by a government guarantee, so the whole point is that there's less risk involved for the lender.
There'll be a huge pressure. There'll be a huge pressure from the powers that be as well. It's like, well, wait a minute.
Exactly.
Yeah, they've got to make it higher because you've got a guarantee here.
Exactly. Yeah. The whole point is to try and get the market moving at that level, not restrict it by putting in interest rates that are unaffordable.
We know the first-time buyer is the lifeblood of the property market to a degree. I know landlords as well. A lot of people castigate landlords, but the reality is if the landlords don't buy at that bottom end, you know, where the first-time buyer comes in as well, and you don't have a good mix of that, and don't have an active market in that area, then you can't allow these people in these properties to upgrade to the middle market, and then you can't allow the middle market to upgrade to the top market, and then the top market then upgrades down typically to the middle, to the bottom market again. So it's a cycle. It works very, very well if you get it right in the mixture of tenures, and you just have to get the numbers right.
Well, this is it, but it's also the banks have to get their criteria and their credit scoring right as well, because one of the big frustrations we've had as lenders have gradually come back into the 90% marketplace is that, for instance, the two biggest lenders that were doing 90% by themselves were targeting first-time buyers, but you couldn't buy a flat.
Yeah.
So, I mean, that's just, to me, is mental. And there are other lenders that are saying we are doing 90% lenders, but I don't think I've had one single agreement in principle accepted on credit score.
Well, that's almost like the unachievable double glazing windows that you can buy. But we start off at £400, and it's like, okay, I'm going to have them, and it's like, well, we didn't really have them because we can't afford, we can't afford to do it like that, or the criteria to get that is unrealistic, so nobody ever gets it. But it's actually to get your details, to get you in the door, to sell you something else.
So hopefully this will help that as well. Hopefully we'll see a reduction in some of the credit scoring requirements at slightly lower levels that are just they're punitive, especially when you're dealing with young first-time buyers that don't have much of credit history. They've got absolutely clean credit records, but there's not much on it. And so they've not had a chance to build up the score that some of these lenders are asking people to achieve to get a 90% mortgage. A lot of this risk, as we keep saying, is being taken away. So hopefully it will ease up all of these sort of top-end market interest deals.
Fantastic. Okay, thanks very much, Neil, for coming on the show. And as I says to everybody else, I'm going to post Neil's contact details in there in the post after this show, and you can get in touch with him direct. So that's thanks very much, Neil Bird from Cara Mortgages. And
thank you.
See everybody else at 9:30 on Saturday morning for the Fife Property Show. Bye-bye for now.
Bye.